Hi guys, it's 𝗡𝗙𝗪𝗑𝗫. Today we're going to talk about lending platforms. Lending in DeFi doesn't involve a middleman unlike in centralized finance. Let's take a closer look at some of the lending platforms. And note here that there is no particular order. We just chose some of the most popular ones on the crypto market today. Aave is DeFi lending platform. Aave translated from Finnish means ghost. Aave is live on Avalanche, Ethereum and Polygon with dozens of assets featuring variable, borrow and interest rates on each chain. At its core, the Aave software enables the creation of lending pools that enables users to lend or borrow 25 different cryptocurrencies including Ethereum, Mana. Aave also introduced so-called flash loans. It's the first uncollateralized loan in DeFi. Because there are no widely accepted credit checks, credit scores or credit history in decentralized finance, the current standard for borrowing calls for collateral to be used to guarantee decentralized loans. If the user wants to borrow, let's say 100 of DAI on Aave, they would need to supply 150 of Ether. If the value of ETH collateral drops too far below 150, the ETH is automatically sold to pay off a chunk of the loan, collateralizing it again. As long as the value of the user's collateral does not drop too far below value of their loan, it is possible to keep the loan open for as long as desired. Borrowing of such a manner is similar to what's available on such platforms as Compound, but Aave offers something interesting, flash loans. The flash loan can be thought of as 3 simple steps. First, user borrows tokens from one of the Aave's lending platform. Second, the parameters for the loan are executed on the Ethereum blockchain, which is super fast because typically adding each new block on Bitcoin, roughly speaking, takes 10 minutes. On Ethereum, it's 30 seconds. Flash loan takes place in 13-second period. And third step is that user must repay the borrowed amount plus Aave's loan service fee, which is 0.009%. If this last condition is met, the entire transaction goes through. If this condition is not met, then the loan is voided, and all transactions made with the principal are also voided by default. Interesting that recently Aave company announced the launch of Aave version 3. According to the Aave founder, version 3 will feature a range of new functionalities, all mechanisms designed to improve user experience, risk management, and capital efficiency. So here we on the Aave website, you can see the markets. If you select one of the coins, you can find very detailed information here, graphs, borrow info, interest rate model, supply information, so available liquidity and utilization rate and stuff like that. Compound is one of the emerging number of DeFi protocols. So Compound uses multiple crypto assets to provide the service enabling lending and borrowing required without a financial middleman, like a bank. Robert Lashner, a former economist, is the founder and CEO of Compound. So, how it works? When a user logs in funds on the lending side of the Compound protocol, they receive seed tokens. Seed tokens are ERC20 tokens built using Ethereum blockchain protocol. So there are different seed tokens for each crypto on the Compound platform. So ultimately, the seed token can only be redeemed for the particular crypto that it represents. For example, locking up USDC in the protocol generates CUSDC tokens, which automatically earn interest for you. At any time, you can redeem your CUSDC for normal USDC and plus the interest paid in USDC. Each asset has its own market, and the amount of supply or demand in the market determines the interest rates, how much money your seed token will accumulate over time. So, talking about the borrowing system, it's the other main feature of the Compound protocol, ability to borrow against deposited and locked funds. So, the amount user can borrow depends on how much they deposit. And each cryptocurrency has different rates. Seed token smart contract automatically closes when the value gets close to the borrowed amount. Just like if they borrowed from a bank or other financial institution, borrowers must pay interest on the number of funds they borrow. So the compound protocol automatically determines and implements the interest rates, which varies with each cryptocurrency on the platform. So here you can go to markets and you can see the overview. All the markets are listed in here. If you click on the app, it will redirect you where you connect your wallet. Let's click on one of the coins, USDC, enter some amount. You can see the borrow APY, distribution APY. It calculates you also the borrow limit. So yeah, you can play around with that. If you click on some coin specifically to check its click on borrow rates, you can see detailed statistics on like everything on its supply and borrow as well. You can see the price, market liquidity, number of suppliers, number of borrowers, also interest rate model graphs. The compound also has its own token, which is 𝗡𝗙. It's a governance token with which the token holders can propose change and vote on them. 𝗡𝗙 is also the rewards token of compound liquidity mining. Whenever lender adds cryptocurrencies to compound liquidity pool or borrows from these pools, they get 𝗡𝗙 tokens. Every day, 2,880 𝗡𝗙 tokens are rewarded to lenders and borrowers. As you see, here's the documentation. Because Compound's code is available in public domain, this means any programmer with a technical background can easily spot errors in the code. Unlike the previous two lending platforms, it is centralized. So a very important question here, who is behind it? Alex Mashinsky is an American entrepreneur who has launched several tech companies. He was the founder of 𝗕𝗓𝗏, which was ultimately acquired by Transit Wireless, and then a CEO of Novatel from 2013 to 15, and presently he is a CEO of 𝗓𝗠𝗧𝗜𝗛 network. Here's their main website, and you'll find options for individuals and as well as businesses. As for the borrowing system, borrow at 1% APR using a crypto, so there's no origination fees, no credit checks, and easy refinance options. 𝗓𝗠𝗧𝗜𝗛 is for those who likes to use mobile apps, because for using it you will have to get an app on Apple Store or Play Market. On the website you can see what you can borrow, like a small calculator, can play around with it, enter the total loan that you're interested in, let's say 1,000, select a currency. Here are the available cryptocurrencies, and also you can take loan in dollars. Then we have the collateral. You can also pick the cryptocurrency for that. And here's the interest rate. It depends on the loan to value. Here you can read more about it, that interest payments are made on monthly basis and principal amount returned at the end of the loan term. Interest rates vary depending on your choice of loan to value. Minimum loan terms is 6 months. So if you repay your loan prior to this 6 months, you will be charged with the interest payable for the first full 6 months. And if you decide to pay in their asset, which is 𝗓𝗏, then you will get some benefits, let's say. To get a loan, you can see the 4 steps here. You have to choose stable coin or dollars, pick collateral and interest rate, and also select length of your loan, then confirm details, and spend your money and keep hodling. Also, what are the supported assets is listed on the website. So as for collateral, it's 40 plus different crypto assets. As for the borrow, we see 6 crypto assets and also the USD. A note here, if you choose to borrow the dollar, your bank may charge a fee for this transaction. More information you can also find in the frequently asked section, like how long does it take to receive my loan, for example. It takes as little as 30 seconds within the application. Can I close my loan at any time, which is important, and yes, you can do that. How do I apply for stablecoin loan, and please make sure you read all the steps here before you do that, and also how to apply for dollar loan. And what benefits do I get paying off my loan with 𝗓𝗏 tokens? I think that can be interesting info. So the 𝗓𝗏 token is a utility token with the real rewards. 𝗓𝗏 tokens give you access to higher rates on earnings and lower rates on loans. That means that if you pay interest on your loans with 𝗓𝗏 tokens, you will receive up to 30% discount on all your interest payments. On the website you can find like their statement, and bank yourself in 4 steps. So get Celsius, verify yourself, transfer crypto, and get paid every Monday. Bank yourself, yeah, because Celsius is not a bank, right? However, it uses bank-grade security to keep members' assets and data safe, and as well as distributing crypto assets among several wallets and top exchanges. It stores a cold wallet treasury to provide last resort insurance in case of catastrophic events, and employs white hat hackers and third-party cybersecurity solutions to provide continuous cover layer of audit and protection. Well, since it's a centralized lending platform, is critical, and it's important to know right how it works, and it's good that they also mention these things. That was it for today, guys. I also remind you that you can join our DeFi Hunters DAO, which is supported by ProBlockchain Media. DeFi Hunters DAO is built on 6 pillars, which is a fund, NFT meta fund, a yield farming fund, game yield accelerator program, and academy. The investment fund is DAO's primary area of focus. The goal is to invest in projects on early stage, like seed and private rounds. Our main platform for communication is Discord, so here you can find all the details on how to join our DAO. Thank you for watching this video. Hit the notification bell to stay tuned, and see you in the next episode.